Price of gold versus inflation. How does inflation affect gold and silver prices? It seems we're constantly on a financial roller coaster. Inflation, the invisible thief of your buying power, is often the uninvited guest on this wild ride. But let's turn the spotlight to something that glitters: gold and its less glamorous cousin, silver. To read the full article right now, see the link in the video description. Also, if you think you may be falling behind in your savings and retirement goals, see the link in the video description to access the free inflation retirement calculator to make sure you are on track. Gold and silver, both monetary metals, often become the safe haven that investors turn to in the stormy seas of economic uncertainty. Gold, more specifically, has an inverse relationship with debased fiat currencies and increases in value as inflation increases. To gain a better grasp of how inflation affects gold and silver prices, I'll discuss the following points. Understanding inflation's impact on precious metals, factors driving the gold price during inflation, and investing options for gold and silver. Understanding inflation's impact on precious metals. To understand the impact of inflation on precious metals like gold and silver, it's crucial to examine the historical data and market trends that highlight their performance during periods of high inflation. Inflation, essentially, is the continuous rise of prices for goods and services over time, which diminishes the purchasing power of the fiat currency being used. When inflation is high, the value of currency drops, and people tend to gravitate towards tangible assets like gold and silver because they hold and increase in value. Historically, during inflationary periods, gold and silver have seen significant price increases. For instance, during the inflationary years of the late 1970s and 80s, gold prices skyrocketed. Similarly, when inflation surged in the early 1980s, silver prices followed suit. This pattern is not coincidental. These precious metals are known as inflation hedges for a reason. They have an intrinsic value that doesn't erode in the face of inflation. A study by the World Gold Council found that gold's value tends to rise as the cost of living increases. The same holds true for silver. Investing in gold and silver during high inflation, as well as stagflation periods, can be a strategic move. It's not just about riding the wave of rising prices. It's about protecting your wealth from the erosive effects of inflation. However, it's important to note that while history offers valuable insights, it can't predict future performance. Always make informed decisions based on careful research and analysis. Furthermore, the supply and demand dynamics of gold also play a crucial role. The annual increase in gold supply roughly matches the global economic output's long-term growth. This balance helps maintain gold's value during inflationary periods. Here are the key factors that influence gold prices during inflation. Investor behavior, the shift towards gold as a safe haven asset. Currency devaluation, the decrease in currency value prompts investors to seek solid assets. High mining costs. Inflation can increase the cost of gold mining, reducing its supply. Central bank policies. The actions of central banks can impact gold prices. Economic uncertainty. Inflation often comes with economic uncertainty, which can drive up gold prices. Presently, there are other drivers of the gold price that are contributing to gold's record highs. Most notably, the record mass purchases of gold by world central banks in the last 5 to 10 years show no real sign of slowing. These various central banks view the continued inflating of the dollar and the massive U.S. national debt as a growing risk. Hence, the desire to diversify their reserves outside of the U.S. dollar and hold an asset with time-tested resilience. The established trust in gold as an economic constant of the last 5,000 years has solidified its trust among these large institutions. Geopolitical uncertainty, as it relates to global conflicts, plays a role as well. Furthermore, increasing doubt and cynicism as to the accuracy of government-provided data that measures inflation is causing investors to hold more gold as a safe haven asset as well. I just want to take a moment to thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Now back to the video. Investing options for gold and silver. Given the factors that influence gold prices during inflation, you might be considering investing in gold and silver as a hedge against economic uncertainty and portfolio diversification. Let's explore the various options available for such investments. Firstly, you can invest in gold or silver through exchange-traded funds, ETFs. ETFs track the price of gold or silver and trade on the stock market, providing a convenient way to gain exposure to these metals without having to store them physically. Although it's crucial to remember that with ETFs, You don't directly own the physical gold or silver, and counterparty default risk is much higher. Gold and silver mining stocks are another investment avenue. These stocks tend to be more volatile than the metals themselves, but they can provide significant returns if the companies perform well. Finally, you can buy physical gold and silver in the form of coins or bullion. This method offers you direct ownership and control over your investment. It also provides less downside risk than gold ETFs or other paper gold products. It is worth noting, direct ownership requires secure storage and insurance, which can add to the cost. However, many gold investing companies provide options to waive or reduce these costs depending on the contract. A tax-advantaged way of owning physical gold without the stress of storage in your own home is a gold IRA. Working with a long-established and trusted gold investment company that has studied and actively monitors the various economic cycles, central bank policy shifts, and the various movements of the markets, can eliminate a great deal of the headache. These gold IRA companies can provide serious gold investors with competitive prices, transparency, a reasonable buyback policy, reliable customer service, and more importantly, robust security and storage of their precious metals. However, finding the right gold IRA company for your individual needs is critical. For example, if you require a low investment minimum to start a gold IRA, Birch Gold Group or American Hartford Gold would be two choices to consider. However, if you are a serious high net worth investor who can afford a higher minimum to take advantage of the most competitive gold prices, then Augusta Precious Metals would be a good fit. Furthermore, Noble Gold Investments provides gold IRA as well as private investment options for home storage. See the links in the video description to find the right gold IRA company that best serves your needs. So, you've seen how inflation can silently erode your wealth and why gold and silver can act as a hedge against this. The dynamics of their prices during inflation, driven by factors such as real interest rates and supply and demand, offer opportunities for preserving wealth. With various investing options available, from bullion to ETFs, it's clear that understanding these precious metals can be a valuable tool in your financial toolkit. If you have a minimum of $100K in savings to protect and want to take advantage of the most competitive gold prices, see the link in the video description to attend a free gold and silver educational webinar hosted by Augusta Precious Metals. Reserve your place today. Thank you for watching.